Okay, this is module number 8, trade evaluation. We are on the last pillar of our trade process: identify, execute, manage, evaluate. It's where Coach Sammy comes out. It's one of the more enjoyable parts of what I do as a coach and a mentor and a educator in the market. It's where we pick out those lessons and we can find where we need to improve to then go and improve. And it's part of that growth mindset and that growth trajectory that we need as market participants to get us where we want to go. Okay, so we need to process, practice, evaluate, improve. Okay, so hopefully you'll enjoy this module. See you on the other side. Okay, module number 8, evaluation and the golden rules of trading. It's where we come into our own, teach the world to trade, win or learn is our mantra and everything that we believe in and stand for. And it is only fair that I explain it a bit further on this module. So basically, performance improves after the trade, never during. It's after the trade, we can then take stock and review and evaluate, reflect, learn, and grow. Right at the end there of your trading process, we've got the evaluation phase. We've got that preparation, which is almost a separate module and course and conversation itself. It's a big part of how I start my book, Learn to Trade Like a Professional, where we have that preparation phase. And there's a lot that we need to understand between motivation, ourselves, knowing ourselves, the time that we have to give to this craft, the skill set, the knowledge that we need before we even go on to the full trading process, which is identify, execute, manage, and then evaluate. But, if you do rush in and you do follow the trading process and you then get to the end, the evaluation phase, and you do it properly, you can expedite your learning very quickly. What professionals do, the industry standard, review every trade without question. Every trade needs reviewing. Win or loss needs to be reviewed. Very important. Separate the outcome from the decision quality. So the end result, separate that from how well that decision was made and the many facets that went into making that decision. Look for any process that break down, any part of that process that broke down, dig into it. Track your behavior patterns, this psychological edge that you're trying to create for yourself when you're entering the markets. You've kind of got to, we'll talk about it in a minute, but you've got to be in tune with your emotions and understand your emotions and your behaviors running into those trades and during those trades. So how to evaluate? 2 simple questions for your foundation, entry-level trading. Very simple. How could I have made more out of the trade? And the polar opposite, how could I have lost less? That's your starting point. And it's still very often my starting point when I'm sat down and I'm looking at a trade and I'm at the evaluation stage. Right, how could I have made more? How could I have lost less? Digging into it, trying to see what comes out. We're always looking at the outcome versus the process when we evaluate. The outcome's very, very general. You either lose or you make profit or loss. And there's that emotion afterwards. How you felt can often give you clues on how the trade was structured and how it went. If it was rushed, if it was well timed. Emotions are very important in this phase. We'll go on to talk about psychology in module number 9, but it comes up in every facet of the trading process. And part of the evaluation is where you pick these things out. And in that process, again, was the plan followed? I have a big poster framed in my room that in my office that says "Stick to the plan." It's a very well used phrase in the Warner Baker household. My wife even parrots it back to me if we've got a day out with the kids and whatever, and I'm trying to shoehorn something in. Bang! Stick to the plan. It's almost like a red card comes up in my face and I go, right, okay, we'll stick to the plan. Because it's very important. If you stick to the plan, things go right. You deviate from the plan, that's when things go wrong. Was the risk defined? We talk about your trading risk, how much you put on a trade, how much you're willing to lose in that trade. One of the big missing pieces for traders, but you've got to find out in the evaluation phase. Did you do all that? We're running through a trade process from start to finish, as per the professionals. Myself and all these hundreds of traders have put down over years. And the evaluation phase is picking it apart. Sometimes we all forget, parts of the process, and it's very easy to see when a trade's gone wrong when you're picking it apart and you go, well, I didn't identify properly, or I didn't execute properly, or there was an issue here or there. But you've got to write it down and evaluate that, right? And understand it. Otherwise, you don't know you're doing the wrong things. And again, emotions in the process, were they controlled? Were you the best version of yourself when you were putting those trades on? That trader mindset, was it there? Were those emotions controlled? Got to try and be almost emotionless when you're trading and have that kind of zen, calm, and level-headedness to then follow through that process. Got to ask, where did that process break? You got to say, right, was the identification correct? Did I do the right amount of technical analysis or fundamental analysis? Was there something I missed? Was it disciplined execution? Was I waiting for the best price? Was I rushing in? Did I not get in quick enough? Everything can be assessed and evaluated for you to then learn and grow. Was your management proactive or reactive enough? Did you have contingency plans in place? Did you think about hedging your position? Various other factors in the management process. Again, calm. Did you remain balanced emotively to execute your management process well enough while you're in the trade? Were you keeping an eye on things? This is a big red flag for a lot of juniors. They put the trade on, maybe take an eye off it, don't have stops in, don't have exits in, just let the trade go, and then all of a sudden I'm tapping them on the shoulder going, what's going on here? And they're like, oh, I totally forgot about that. Just focus is a big one. I talk about that a lot in my book, in the book. It's essential to succeed in anything really, let alone trading. But trading, you take your eye off the ball, as we say. The markets don't care that you're not looking. They'll take advantage of you at the end of the day. So that's part of that management, where you have to be proactive and reactive and focus and on the ball. And then have you learned from previous evaluations? We're going to chat about this in a minute. We're going to talk about the golden rules that you're going to set for yourself and you're going to learn for yourself. But these are essentially what you're learning and helping you grow. One of my traders many years ago, one of the first ones I took on 15, 16, 17 odd years ago. Wow. Years of stacking up. He had a post-it note on his desk, on his screen, and it said, to do the same thing twice and expect a different result is the definition of madness. And that's an Albert Einstein quote. And it's true, because if you have done a mistake before and you've evaluated properly and you've written that mistake down, you shouldn't be doing it again. These lessons in the market are costly at the end of the day. And it's the evaluation where we get the value from those lessons, right? That's what's important. So learning from those previous evaluations. We talk about behaviors a lot. Naming it and taming it. This is a very famous psychological trick. Once you name it, you can tame it. I sat down at my desk today. I felt excited. Name it, because if you're feeling excited, you might be rushing into trades that you shouldn't be rushing into. Okay, so once you've named it, I write it down on the top of my sheets every day when I do my checklist. My emotion, it's as much as writing down the data that's coming out. I'll write down how I'm feeling. I'll do it in the morning session. I'll do it in the afternoon session when the US come in. So noting your moods before, during, and after your trades and throughout the day, very important, just like I do. And then SWOT analysis. Look at look inside yourself when you're trading. And these change. I used to do this every month with my junior traders and myself for a whole trading floor full of people. I'd get them to write this down for me. What are your strengths this month? What are your weaknesses? What's the opportunity with yourself, and what are the threats? And then these gave us a good basis to work from to mentor and coach and improve traders. So no different for yourselves. One, you're doing this foundation and you're thinking about getting into trading, and there's certain profiles of people that I think will be suitable for this course, and then going on to trade, and then maybe those that would struggle because they don't have the right personality or time or whatever. But you'll know that from doing a simple SWOT analysis about yourself and how you could be a profitable trader. What are your strengths? What are your weaknesses? What's your opportunity? And what's your threats? I'd say do this as soon as you finish this module. Okay, your SWOT analysis of yourself, why you think you can succeed, make money in the markets, or become a sustainable, disciplined trader. And the golden rules. Now, this is something, a little concept that I brought up many years ago for myself as a junior trader, and I took it on really, and I've used it in all my trading, coaching, education, career. Is a set of rules. So there's no. I always used to say to myself, "There's no manual," and then teach. There's no manual for learning how to trade. I mean, I've done my best to put it into paper form and build a book with the process out from start to finish. Hopefully, you'd read the book and then you could have a good chance at being a sustainable, disciplined trader in the markets. But you still have to write your own golden rules, because every trader is a different personality, likes certain markets, trades at different times. So you will then bring in your own ideas of things that work and don't work, right? And these are your golden rules, essentially. You are the author. So your trading rules, I've had so many random ones over the years. Like I'd look at my P&L, I'd record my P&L every day, of course. And then I saw that Wednesday afternoons, my P&L struggled, and I was very rarely making money on a Wednesday afternoon. So I was like, well, stop trading on a Wednesday afternoon for a bit and see what's going on. Stuff like that, it could be anything. Rules for risk: don't trade a certain market over a certain size, because 9 times out of 10 you'll lose, or you won't be able to manage your risk and it will turn into a loser. This sort of stuff, all very pertinent to yourself. Behavior rules. Like I said, don't trade on a Wednesday afternoon. Years ago, that was one of them. Don't have too much size on a position leading up to a figure. These sorts of things. Certain behaviors. It's habits. Trading is very much about building positive habits and removing all the negative habits. It's same as anything else that you want to succeed in. It's that constant self-coaching that you've got to do, and writing your golden rules and evaluating. You're coach number one for yourself. I never had anyone to rely on. My managers, or there's a couple of senior traders that I worked with before I started working with a trading coach myself. So I had to learn all this stuff myself, and part of that was writing my own golden rules and evaluating myself properly. And then those discipline rules as well: trade rules, risk rules, behavior rules, discipline rules. Anything that repeats, whether good or bad, needs to go into your golden rules. I got pages and pages of notebooks where I've written stuff down about my own trading, and I look back on them. I suppose I'm a bit sad and a bit nerdy, but I like looking back at them and thinking, wow, yeah, that was a good rule, and that was some good data that I put down, and I still remember that, and I still do that now. So it's not wasted. It's not wasted time. This is your own benchmarking for yourself as a trader, and you're trying to raise your floor all the time. And you do that by evaluating, writing down those golden rules for yourself to work around. Failure is feedback. I remember my first trading job, a trading psychologist or a psychologist. I think they moved into trading. It was very early days for trading psychologists. He would frame it as failure is feedback, right? And that's where the whole win or learn comes from at the end of the day. You either win or learn. You don't lose. As long as you're evaluating properly, you're getting that lesson, okay, which is going to make you a better trader, more sustainable, more disciplined, and growing your relationship with the markets. So use that failure as feedback, but you've got to do that by evaluating. If you don't, you're losing so much value. It's untrue. So the massive takeaway here is that growth happens when you look inwards. We found that traders that did the best were the ones that were able to self-evaluate, pick out the lessons, use those lessons to grow, and then better themselves moving forward. They weren't the ones that necessarily, listened in class and did everything. Obviously they did everything that was asked of them and they were told to do. But the ones that really excelled, the ones that could learn themselves and have that growth mindset and not a fixed mindset. That's what's very important here. There we have it. Module number 8, win or learn, evaluation. A very important facet for you on your trading journey and one that is missed by a lot of people. My top tip for evaluation: get yourself a journal dedicated to trading and make sure you just jot down all of those lessons that you get every day that are very unique to you, mistakes you've made, things that have worked, things that haven't worked. How could you have made more money? How could you have lost less? Write it down. It really, really helps. I've been doing it all my career and I can't recommend it more to all of my traders that I've taught over the years. Okay? So there you go, trade evaluation. Get yourself a journal, write in it, take notes. Sam's big tip of this module, and see you on the next one. Okay? Stay lucky.